Good morning, everyone. Ian from Limit Up here. I'm an ex-banker, market maker in currencies, early Bitcoin investor, and now junior capital markets commentator, i.e. trainee. Today, I've got a really special guest, Sach Varu, who is a digital assets professional. So we're really going to have some expert knowledge portrayed to us today by someone that actually puts the deals together, works in the business, not a founder, not a CEO yet anyway, but someone that really lives it day in, day out. So welcome, Sach.
I appreciate it. Too kind.
No worries. Do you want to give us a quick 30 seconds about how you got here? I mean, I'm sure you've been asked this many times before, you know, JP, Goldman, etc. How did you end up where you are today?
Yeah, absolutely. Yeah, fairly interesting story, and probably not too dissimilar to a lot of like-minded professionals like myself, and in the particular kind of era in which I grew up. I guess I graduated just after the dot-com boom, and then that very quickly went bust. So I do draw a lot of analogies to kind of what happened in the tech sector then, back in the early 2000s, the late 90s, to kind of where we are in crypto adoption as well, but I'm sure we'll comment to that later. Yeah, I worked for the big banks for about 15 years, mainly the American ones, which, you know, led me to network amongst like-minded people. Bitcoin started trading a lot more heavily during kind of the 2016, 2017 boom period. And I had some friends just click trading some ARB strategies. And I had other friends that had money stuck in it, some weird and wonderful exchanges, which probably don't even exist anymore. So we were always discussing it kind of back then. A friend of mine then spun up his own hedge fund, so I started doing some advisory work. I ended up moving out to Asia amongst that kind of melee to run kind of a portion of one of the banks' FX strategies out in this sort of region. So Hong Kong, Singapore, Australia, and Japan. And yeah, digital assets and crypto, and especially the crypto native stuff in Asia, was kind of where it was all happening. I ended up joining a brokerage out here, and you just one foot in front of the other, you just start getting deeper and deeper. So initially it was just a tradable asset class, which was quite interesting. I fell into the rabbit hole when I read the Bitcoin Standard, and I was like, okay, maybe it just showed how naive I was in terms of financial markets. So I think, you go and work for these big banks, right? And you're siloed very quickly. You become a specialist in whichever area you're in, and you're just a cog in the wheel. And that might sound like stereotypical, but it's kind of really what these bigger organizations do to you. And then you start learning about financial intermediation. You start looking at kind of the origin stories of money and trade, and you kind of wrap that all together with your experience, and you're like, you kind of then start to dig yourself further and further into crypto. So yeah, I've kind of been in crypto, I'd like to say 2017, in just poking around, and then advising some hedge funds, working for a brokerage. I ended up working for an exchange for a little bit here in Hong Kong, and then I guess over the last 18 months or so, really more on kind of an advisory work for various kind of boards, various projects, various initiatives. So a lot of deal making, a lot of speaking to people that are either trying to raise money, trying to get into digital assets, running derivative projects where they see certain gaps in the markets. There's some really like interesting stuff out there, right? And the cool stuff for me is the element of disruption, not just kind of financial intermediation. So there's some cool disruption stuff out there. There's obviously a lot going on in the markets, especially geopolitically, which kind of overlays all the stuff that happens kind of on the streets when we're deal making as well, in terms of people just looking for APY or APR based on kind of what they're holding, or family offices just looking for diversification. Sorry, I rattled on, but there's
that's all good. It's amazing when you work for a bank what you don't know about what you're meant to be dealing in. I didn't till I discovered Bitcoin probably around the same time. I think it's 2016. I didn't really know what money was, but had turned over hundreds of billions of dollars every day for the best part of 10 years without really realizing what I was doing. And we used to say, well, who's going to do dollar yen today? It didn't really matter who it was because it's just two numbers, right? Two numbers and an order board. That's all you needed to know. No, very, very interesting. Thank you very much. So the first thing I think we should talk about is something we've already touched on, the Bitcoin maxi theory. Are you a Bitcoin maxi?
You know what? I originally I kind of like the financial capital markets element of it. You know, things are tradable. There's dislocation in prices. There's different pools of liquidity. There's, you know, however you want to chop up financial markets and however you want to make a buck from 15 cents is kind of, you know, how I initially came at it. But yeah, Bitcoin was really, for me, really the hook. It really was. Like, you look at kind of the origin story, you look at kind of how adoption looks and how unique it is. And then for me, I slowly, you kind of get bitten and then you slowly start to turn. So I turned a little while ago in terms of being a Bitcoin maxi. You know, there's so much you can cover on this, right? There's the element at which it's kind of that social consensus mechanism, which makes it really interesting. There's Bitcoin, which is the only token out there currently where it has that supply dynamic as well, which is infinite. It has that hash rate, which continuously gets higher, which means it's harder to mine, and it has a really interesting supply demand dynamic. And with all those kind of factors and kind of, again, overlaying it with geopolitical stage that we're set on at the moment, like I think it's really hard not to become a Bitcoin maxi. Like, for me, there's Bitcoin and then there's everything else. And Bitcoin is genuinely like that asset which, you know, is substituting gold slowly but surely. And it relates to kind of, if the store of wealth is that there's additional layers of store of wealth where, you know, you might have held like gold before, you might have used I don't know, property, other kind of other assets in the markets. But I think for the world we're in, which is digital, the mindsets of the transference of wealth between generations as well, the ease in which that's done, you know, I think it just ticks so many boxes outside of the fundamentals as well as the fundamentals. So yeah, absolutely. Am I a Bitcoin maxi? Yep. Until the next thing may come along, because you never know, quantum computing or something else might bring something else which is a better kind of ticks the soundness of money and so on and so forth. But for me, it's Bitcoin, and then there's almost, you know, what I mentioned earlier, which is kind of the dot-com boom, and everything else is a play on tech and blockchain.
And isn't it interesting that the Bitcoin maxi theory, that if you looked at 6 or 7 years ago, it would be, you know, and the story is slowly but surely the institutions will come and then governments come, and you think this is completely impossible, this is never ever ever going to happen, has exactly played out as the textbook says, hasn't it?
Yeah, absolutely. It's a really weird one, and the nice thing is, and again, the great thing about being in crypto is it's a bit Marmite. Like, people either love it or they hate it. So you always have these conversations where they're like, oh, what is this, you know, this digital thing which you can't even see, feel, touch. And the other end of the spectrum is you get people that are selling up houses, selling up everything they own just to own Bitcoin, because they think, you know, that is going to effectively give them financial freedom in the long term.
I haven't heard digital Marmite before, but I will definitely remember that for the future. So one thing that I'm really interested to get your views on is how does this adoption that's nearly here actually play out? So if the FDIC says banks can custody Bitcoin, the banks go, yeah, bring it on, but actually, how do they do it? Does everyone open a Coinbase account? And do I walk into a bank and say to the teller, can you put some Bitcoin on this Trezor? I mean, how is it actually going to work, do you think?
Yeah, that's what, Ian, you're not making it easy for me today, right? There's so many layers to the complexity of these things. I think what will happen is you will definitely, like, for me, it's kind of that Venn diagram. You're going to have crypto native, and then you're going to have financial markets, and you're going to just see them start to overlap more and more, right? I think you will always have the crypto native guys doing, wanting to not your well, I can't remember what the saying is now. not your coins, not your keys, not your coins. No, that's what I saw. So not your keys, not your coins, and that makes a lot of sense. Like, you want to, you want to have ownership for your wealth. You want full sight of it, and so on and so forth. I think the problem with that is, for most people, we're in a world which pays for convenience, and you want to pay for security. So you will want traditional custody style solutions. You're not going to want to risk sitting on your bank account or your savings account or whatever you might need. So I think you'll start to see more hybrid solutions, and you'll start to see everything from the risk averse all the way through to the more conservative, wanting something like a banking solutions. And then, as financial markets will probably be the forefront of adoption for a lot of the cryptocurrencies, you're already starting to see players such as like OKX, who have partnered with traditional banks. You've got Zodia, who are backed by Standard Charter. You've got Laser Digital, who are backed by Nomura. So you do have custody solutions out there with digital banking fronts. But I don't know what the future will hold completely, but I think there'll be a lot of optionality available.
So it's more like a wallet that can connect to all of your money or assets all in one place. Do you think that is an end solution where you can combine both into one digital place?
I definitely think we're going to start seeing a lot more of that. I think it was just Bybit that just announced that they're going to slowly get into kind of the traditional markets. And if you actually ultimately look back at what FTX was going to try and do, and obviously that's who knows what they would have done, right? But they were looking to tokenize traditional securities. So once you start tokenizing traditional securities, which then become tradable 24/7, and you're using an FTX platform, not a Charles Schwab, not a Hargreaves Lansdown, or whatever your IB, your interactive broker account, then you start thinking, actually, who's going to win on the adoption front? Is it going to be the crypto native guys that then start to, the Krakens of the world, or is it going to be your more traditional guys who, the CME seems to be doing a fairly decent job in offering, Bitcoin spot futures and ETFs, but I'm not sure who's going to win that tokenization race. And the traditional banks are doing everything behind closed doors as well. So, either through M&A or through developing their own tokenization, I think there's going to be the next couple of years will show like who's really been building in the background.
Yeah, I think the traditional view of banks being legacy technology operators is wrong. I remember back in the late 80s when I first became a trader, we were trading on what effectively is instant messaging now via Reuters and whatever. So I'm guessing the banks already have all the technology ready to go, just waiting for the opportunity.
Yeah, I think you'll see, your JP Morgans, Bank of New York's, Goldman's. Like, tokenization is a massive technology efficiency play, because you want to hold all your assets within your own organization. You want to cross cross collateralization. You're going to have better settlements. You're going to, you're just going to make your platform, your brokerage, a lot more efficient in all sense, or for, and everything will be client driven as well. So your efficiencies will reduce costs and allow you to do more and leverage and so on and so forth. So all those good things that happen just on the blockchain. Then there's your question about kind of the crypto native adoption as well. Like, okay, well, now you have blockchain technology in-house, making your technology a lot more slicker. Like, is there going to be enough client demand for you to make money from crypto native assets, or do you have to wrap them in some sort of securitized form to then, solve for distribution to your clients?
Yeah, that's the question. How's it going to happen? Yeah, interesting. Scott Vestman's been clear that he's going to try and save the United States by using stablecoins, amongst other things. Do you have any ideas about how that plays out, what he's planning to do? Because I must admit, I'm a bit lost by the value of those stable coins, apart from being obviously instantly transferable and backed by some sort of paper. I mean, isn't that what we do already in a less efficient form, of course?
Yeah, it's since the whole Trump administration has come in, it's this game of cat and mouse on really whether what they're doing is to kind of build the US around this crypto financial hub, or is it just for their own administration to make money and then leave it to the next administration to deal with whatever happens. It's a difficult question because there's initially stable coins actually probably what's the best way to address this? I don't know, you might need to cut this in. There's a lot there. There's a lot to unpack, I think. All right, hopefully I've got you back on video as well, because this connection's not great.
Yeah.
So let me start again. So yeah, stablecoin adoption in the US. The good thing about looking at stablecoin adoption is the higher the rate of adoption, the more crypto rails are in use, and therefore people are looking for these style of solutions, whether it's for remittance or whether it's for yield plays or whatever it might be. And I think if you probably went to Token 2049 in Dubai or any of the more recent crypto conferences, you're starting to see kind of real world assets become tokenized, and people looking for yield off the back of those real world assets. And I'm sure we'll touch on that too. And does the US then want to become the centralized hub for tokenization, real world assets? And through that is really your foundation is stablecoins. Yeah, that's probably the play, right? But is that anti-dollar? Initially, I would have said I would have thought, yeah, look, the stablecoin, the crypto thesis is very, and it's the antithesis of kind of what the US dollar is trying to be. But if the world is already migrating down the de-dollarization path, is it better to be ahead of it by having that kind of the jobs, the associated flow, you can go as far as replacing the Swift network as well as kind of tokenizing yields and so forth. So I think there's just a lot of different directions you could go. It's probably not a bad place to have clear guidelines and rails in place to then have to boost that adoption. And then you've got a free option in the future to be like, well, look, if we can capitalize on it through flows, through jobs, through whatever else, through more companies being in the US and US becoming that crypto hub, then great. If it doesn't work, then it's still a new industry which we have a significant exposure to. And actually, I think, again, having that foundation is quite important, but where the US and UK and Europe really are the financial market leaders, right? So then you get into, all the complexities of derivative markets and so forth. And that's where, then you start to see the hundreds of millions and the billions turn into trillions. And again, that's where the expertise lies, mainly in the US. Look at all the big trading hubs and trading houses, the BlackRocks, Vanguards, and let alone your Jumps and your Jane Streets. So all your prop shops as well are all in the US. So complex financial markets naturally sits, well, and the US has the history for adoption and spinning out some interesting instruments from financial markets for the good or the bad. We still remember 2008. So I think I don't think it's a bad play, and it all starts. I think it all starts with stablecoins.
Yeah, and interesting about real world assets. Certainly, BlackRock has been really actioning that play very aggressively for the last probably 2 years. And I'm guessing they're getting in ahead of what is perceived by the administration to be the mainstream adoption. So if you're going to get into it, you need those big players in there to lock it in. Otherwise, someone else is going to come in and grab it.
Yeah, absolutely. I think if you look at, like, and this is my own personal opinion, right? If you look at what BlackRock or FT or any of these big guys, what they're really good at doing is solving for distribution. So if they think, oh, there's another asset class on the rise, how do we give? And they may argue that it's to serve their clients and their customers, but they're just huge intermediaries, right? They're just creating vehicles and then charging you fees to then store it on your behalf, and then they build a brand which is trusted. Like, BlackRock is super smart. All you're doing is saying, oh, well, I've just found another way to intermediate, to bring in a whole bunch of new flows. And then again, I can sit on this, long only style structures, not take much risk. And I've just built myself another revenue generating business. Like, for me, looking at Bitcoin or Ethereum flows in and out of the ETFs, or looking at what they've done with the BUIDL, it's great for distribution. It's great for people to get into kind of crypto, but really building, it's part of the BlackRock empire, and that empire is they get their fees. Like, it's a zero sum for them, I think. Maybe really cynical, but it's the way I see it.
Awesome. So we originally connected via the Adamus principle, didn't we?
We did.
And I remembered you talking about, maybe it's us directly, but the places that are actually understanding where crypto's going are probably not the places you'd expect. So Europe, you were saying, is way behind. Is that still the case, do you think?
I guess I've got two different views on this. My initial view is from general kind of the markets and what they're doing with Mica, and I think they've got generally a good framework for digital adoption. They've got a good framework for traditional investing. So if you look at all traditional UCITS, mutual funds, Europe, they do quite well. They've solved for distribution, even though I think there's still places there where you have to subscribe or redeem your units in your fund through fax machines. So there's still some legacy structural issues in Europe. But what they've done with Mica, I think they've tried to harmonize what the regs look like, and they're forcing people like Binance and USDT and Circle and so forth to then fit within that regime. So I think that way it's fairly smart. However, the other side of the story is when I speak to my friends in the UK and Europe, digital currencies and cryptocurrencies is still very out there on the curve. It's, not really talked about as much, up until, we're getting into that furore of speculation, and Trump is doing something on a coin, or, we're not, I don't feel like people on the street there are talking about, what RWAs look like, and Pendle, and, access to APY or APR on chain versus off chain, and what that really means. So here in Hong Kong or in Singapore, you can bump into, people in the street. You can talk to someone in a bar, and you can have a genuine conversation about who's doing what, whether they're farming in DeFi or whether they're trading through one of the centralized exchange. And like, it's fairly synonymous with a normal conversation. Whereas when I'm there speaking to friends, family, and so forth, I feel like, again, maybe it's kind of more on a macro or geopolitical basis. They have 10 other issues before then they get into the digitization of what their assets look like, and that's discounting somewhat maybe Switzerland and a few other kind of hubs, which I think there is that level of adoption. So yeah, I think Europe. Yeah, I think there's some way to go, to be honest. I know there's a lot of traditional funds there. There's your big, your Norwegian sovereign wealth funds. And I think to capture that even 1% slice of that old money is probably where people are positioning themselves, including, I'm sure you see it in Australia with some of the Aussie super funds, right? If you get 0.5%, 1% allocation, and you're positioned with those relationships to then capitalize on those flows, great. Europe, I just don't feel like it's quite there. The US seems further broken in terms of which way they're going versus which way they want to go. It's just not clear. And this whole populism regime of like what we're doing versus what we're really doing versus what's being said, I don't know. I think it's just so hard to really delineate what the real messaging is.
Oh, and where does China come into this? Because officially banned, but yeah, you can imagine 1 billion people in the darkened rooms in their homes doing stuff with this, because it's kind of their nature, isn't it? Like it is in Hong Kong and Singapore, etc. Question mark. Do you see anything in China?
Yeah, Hong Kong just feels like the poor cousin of China, really. And Hong Kong is actually a great test bed for China, and China can own it or disown it as it pleases. Now, I think that story is now slowly fading away as Hong Kong is now absorbed more into China. I think what everyone's really looking at is, on the traditional side, if Stock Connect then allows access to some of these Hong Kong ETFs, which are Bitcoin or Ethereum based, that could be really interesting from a traditional financial markets. I think you have seen adoption levels rise on the institutional side in Hong Kong. But Hong Kong's always, the thing that I love about Hong Kong is there's always a way in which you can get access to crypto. And there's various brokerages, there's ways in which you can do it on the crypto native side or through one of your traditional brokerage accounts, whether it's one of the big Chinese ones or whether it's through interactive brokers. There's ways in which you're doing it. Now, I feel as though a lot of the crypto origin stories in Hong Kong, in Singapore, are from China. So, they've always had a hyper interest in the movement of money, capitalizing markets. They're, moving things cross-border has always been a huge frictional hurdle. So I think that's where Asia's naturally seen that adoption of crypto, and China's had a lot of money behind it. Hong Kong has always been a cash-heavy economy. So where that cash is coming from into Hong Kong and where that cash is coming from Macau, I'll leave that to your own imagination. But you could probably correlate that to where the crypto markets are quite easily. And if you look at again, if you look at BitMEX, FTX, Amber Group, Matrix Port, like all at least in the first couple of cycles, you look at all the big brokerage institutions, quant funds, 3ACs, and so forth. Like they all had origin here in this region for there was a purpose behind them being here, right? And that's probably China.
Okay, cool. All right. Well, we've taken up enough of your time. I know you're really busy. Thanks very much. Anything you'd like to say at the end? And, you know, how can people connect to you if they want to?
Yeah, no worries, Ian. I'm on LinkedIn. I also have a Telegram as well, so just drop me a message on LinkedIn. Happy to discuss markets, or have a coffee if you're ever here in Hong Kong. So pop by. There's lots going on. But yeah, I think the thing I love about crypto is its level of access is unprecedented, right? Like you can be speaking to CIOs, CEOs, traders, quants. The access to market info is just there. So, you know, and there's a lot of paying it forward in crypto. Well, in most circles anyway, right? So you can pick up the phone and find the right person to connect to who's going to help you out, or vice versa. So yeah, if you're ever in Hong Kong, give me a shout.
Cool. All right. Well, we'll cut that off there now. I just stopped the recording. So thanks very much for that. I really appreciate it.